What's up, guys? I promised I would do a series of videos talking about some of the patterns that we've been referencing in my charts, macro bottom patterns in the crypto market all over the place if you're looking at alts right now. And one of those patterns is going to be the bullish dragon. Now, this is one of my favorite patterns, period, because there's a lot of confluence with other patterns that you might know if you haven't heard of the bullish dragon. Sometimes you'll see other patterns, other classic patterns appear inside of the bullish dragon as the feet, as the base, where the accumulation takes place after the sell-off. I'll get into specifics in this video, but what I'm going to do is show you a schematic I put up. This is going to be in my Discord. If you're in the Discord, I'm sure you've seen something like it a million times, because it's in a lot of our trade setups. It's in a lot of the charts I've been posting lately, especially. So yeah, let me pull up the chart here. Okay, so a lot to take in at first, I get it. Here, basically the bullish dragon looks like this. You're gonna have a top. Now, a lot of the time bullish dragons start after a double top, after a higher high double top, at the end of a cycle. You'll see them on every time frame, but the best ones to trade, that are what I've been posting at least, are on the 3-day. They're on macro time frames like the weekly, the daily, 4-hour. They're equally relevant, but it's the bullish dragon on a 3-day or a weekly is going to be a macro reversal. It's going to be ending the bear market as you know it. But okay, so a lot of times it starts, you'll get a double top, kind of like BTC at 69K, and then you'll come down and you'll get an impulsive wave. This is your bear market, the ups and downs. Now you could look at it a lot simpler than this, but I'm going to go through a lot of different ways I look at it, ways you can trade it. Maybe it'll confuse you, maybe it'll help you understand by seeing some of these things visually in this context. So then this is going to be a corrective move right here. Sometimes it will be, sometimes you'll have an impulse coming down here first, then you'll get the corrective move, and this would be the second half of an ABC. In the context of a macro reversal, this is your cycle top, right? Pretend that's Bitcoin at 69K here. You get the impulse down. This was the first low we put in the macro, if you were looking at it in that fashion. This was before FTX. This was that initial one. Because what happens after this, a lot of people, initially you would think, I'm going to trade the end of the impulse. That's going to be the low. But usually what you get is your initial low. You'll get another, maybe an ABC. And then you'll get another leg that sometimes you'll get a higher low. Sometimes you'll just get a double bottom. A lot of times you'll get a low a little bit below your initial low. And between this impulse here and this 3-wave up and your low here, that's going to complete this entire correction. So you get an impulse down, and then you get one final low, which is your double bottom, which is your confirmation. And like I said, a lot of the times it sweeps the first low, gets rid of all the longs here, anyone who had a stop loss below this low. Then you get the second one. Then you get, this will eventually be known as the dragon's tail. You'll get some sort of impulsive wave off of that. So, to put it simply, you've got the head of the dragon, and you've got the 2 feet, right? I am not an artist, so then you've got this supply section here in the middle, and that is going to be the dragon's hump. Dragons have humps, if you did not know that. So that's your basic structure. You'll start seeing these once you know what to look for. Once you see a few of them, you'll see there's a really distinct head. You'll see this ABC move, and it's common in some other patterns too, like the broadening bottoms. You'll often see this very distinctive consolidation, then the aggressive move down, then you get your reaccumulation, and then you get the move up. And that forms the head. This is your head. This is your body. This is your feet. And then this is the hump. So the actual breakout of the bullish dragon would be right here. Right? So you get the breakout, and in the same respect, this would confirm the double bottom. So think of it like that. In order to confirm the double bottom, you have to break above the top. So before I go beyond that, let's just for visual reasons, right? You break the low, you hit everybody's stops here, and this reversal also knocks out a lot of the short sellers that may have been in expecting, they say, hey, the bottom of the range just broke. They get greedy. Maybe shorts are adding to the bottom when they see that range. And then the reversal not only stops out the new shorts, but it's also gonna, a cascade effect. And in Wyckoff, this would be the spring phase. And I'll get into that a little bit in this video too, but let's start simply. So yeah, you got this. You get a move up and out of the range, and ideally you get some sort of check back. You don't necessarily have to. That would be ideal, because that is confirming that what was once resistance is now support, and that would also give you a nice level to lean on. If you know we got support here now, you could put your stop losses under the range, and that would give you a safe entry to either compound or to enter initially if you wanted to. Normally I would say this is going to be the ideal place to enter. What you'd want to see, and I'm sure you've seen my LARP lines on some of the charts I've been posting, but what you want to see is a break below, and then you'll get something like this. You get a big move. Sometimes you'll get a move. Oops. Sometimes you'll get a move that comes all the way back up into the supply and then comes down for the retest. This is going to trap a lot of long traders that are buying the breakup. If you entered down here, you wouldn't really have to worry about getting round tripped. You wouldn't, trying to buy it once it starts going, you're in trouble, because it could just as well come back, make a higher low, and then begin the impulse up. Because realistically, this first move coming out of here is going to be an impulsive wave, and the first leg, or the wave 2 of an impulsive wave, could bring you all the way back down, something like this, down to a 786. In crypto, it could come down to the 886. But in this strategy, this is going to be the absolute low. This second leg down, whether it's to, retest the bottom of the range, recapture this, or, maybe you get less than that. Regardless, this is going to be the low. So if you were trying to, either take the trade here or buy some limits down on the retrace, that would be your low. That would be where your stop's going to be. Because sometimes you'll get multiple tests sometimes, and I've seen it in a few cases like Cardano, I think. But they never come back and sweep the spring phase, the sweep. You don't get a second sweep. You get a higher low of some kind wherever it's going to be, and then you get the move up. It might not necessarily be in a straight line like that. Sometimes it is. It's crypto. But the point being is this is going to be your bottom. In some fashion, you're going to get a move up. You're probably going to come back down, back test, and then go. Now, in a basic sense, for your target, first target a lot of the time is going to be the 618. Now, on a macro reversal dragon, usually they're going to go much higher than the 618. Not always, but what I've noticed on lower time frames, or if it's a dragon in a different context, maybe it's after a move up already, like a continuation. This is the correction here, in between, two waves up. In those cases, it's really important to watch the 618, because a lot of the times what they'll do is they'll hit the 618 and that's it. But in the context of a macro reversal dragon, typically the 618's, a first target. But what I like to do, by the way, this is your dragon spine. I forgot to put that on here for you. That's the spine. That's another part of the equation. If you're looking for an entry, is you would want to break the spine. This is your downtrend. This is whether you're trading a harmonic at the bottom of a correction, whether you're trading any pattern, doesn't matter what it is, you're always going to have this trend line coming down. And that's most of your action isn't going to happen until after that supply line's broken in an accumulation range or at the end of a correction. But also, this supply line is a really good gauge of time. If you've got a supply line that's way out here, chances are you're not going to break out till you get closer to that supply line. A lot of the times, the major move happens right at the supply line or after the break of it. And that's another thing you could look out for. If you were moving up, say, hey, you get the range, you come up a little bit, and then go off of the supply line. You might get a check back of that. But it's something to remember, and I think it's pretty valuable. That supply line is going to be a gauge of time for your bear market as well. If at this initial low with this supply line way out here, that should tell you, hey, there's probably going to be another low, or there's probably going to be consolidation. I've got a while before this bear market is over. Now, this is just, something to add on top of the recipe. It has nothing to do with trading the actual dragon, but sometimes what you'll get with these dragons is you'll get something like this too, at the end. So not only is it a dragon, but you've also got a falling wedge. Sometimes you'll get the dragons, and you don't even necessarily have to call these iterations of it dragons, but sometimes you'll get a dragon that's also a right angled and descending broadening formation. So it would be like this. But the idea is kind of the same. Like all those patterns, a lot of these same rules and signals inside of the pattern apply to one another too. I'm going to delete these just for... But another one, sometimes you'll get... Oops. Sometimes you'll get an inverse head and shoulders at the bottom. Or that, that might be the way somebody else would interpret it, but all in all, it's the same pattern, same idea, and actually it's also a lot of the same measured moves, and that's the next thing I'll get to. Alternatively, from the 618, you're going to have the measured move target. Now, say this was... Say it wasn't a dragon. You want to look at this as a right angled and descending broadening formation. The measured move, you just take that, you put it right on the top, and that's going to be your measured move. Now, if you were doing this for... If you were doing it for the dragon, it would be the measured move of a double bottom. Now you could do the lower low, but if you want to be conservative, you just take the two bottoms, or the bottom of the range to the range high, and then you'd get, same, it would have been the same measured move as the broadening formation if you use the lower low. But if you want to be a little conservative, that would, I like shooting a little bit under measured move targets. Just, it gives you a better chance of getting filled if you've got limit orders open. So another way of getting a target for the dragon is to get, your measured move. Basically a 2.0 extension of whichever low you're going with. And if you're using fib extensions, that brings me to another way you can target the bullish dragon, and that's going to be using fib extensions. What I like to do is take the last leg down and do a fib extension from the low to the high. I have my fibs in reverse, by the way, if you've noticed. But you want an extension of this leg here, and you'd target the 1618. Now, if you notice, most times the 1618 is going to be lined up with the 618. The 1618 is going to be the extension, lines up with the 618 retracement of the top to the bottom. So that would be another target. If you don't want to look at levels and be subjective, which again, using just, if you look at the levels, a lot of the times you'll find confluence with these extension targets and actual levels or zones on the chart. But if you didn't want to be subjective and look at levels yourself to try to remove some human error, not that you'd ever have the level wrong, but what you could do is just use these simple methods. The measured move of the double bottom, or whatever formation. If it was an inverted head and shoulders too, it would be just about the same 2.0 measured move target. So you've got, and keep in mind, a lot of the times, if you're buying the sweep, if you're buying the spring event, just the move from here to the top of the range is usually a good trade. Depending on how you, if you plan ahead and you are taking your trade at that bottom of the range, top of the range is usually a good trade. You could take that as a target as well. So you've got, and a lot of the times you'll see the 382 is going to be the area that the hump ends up being anyway. The 382 retracement of the whole correction. So you could do, and if you're in the Discord, you've probably heard this a million times, just using targets on the, you know, the basic fib retracement levels too of a long correction like this is very effective. Take a little bit out at 382, take a little bit out at 50%, take a little bit out at 618. And if you really want to be creative, you could use some of the deeper retracement levels to start hedging your position rather than selling. Now that's gets a little bit more complicated, but that would be a simple way. You know, these are the most common retracement levels: the 382, the 50, and the 618. And then maybe leave a little in at the 786. However you want to do it. Just going over the options. And a lot of the times, if this is going to be, well, depending on the context, I'll say that. Depending on the context, a lot of the times these dragons, if they go past the 618, again, that's often a level that kind of either ends the dragon or it really just goes nuts after that. A lot of the times these will come up, they'll do an 886, 786, 113, or sometimes a 1618 of the entire correction, which I don't even think I've got. A 1618, to put it into perspective, that's why I like these patterns, because the 1618 is going to be way up here, right? Compared to the, you know, just the range we were trading down here. Sorry. But that's the basics. You'll start seeing them if you look at these schematics enough time. If you're in the Discord, if you've seen my charts, I'm sure you've had enough of this in your face to be able to recognize these anywhere. So that's the basics. It's you look for the head, long correction down, double bottom, and then go. Now what I did here is make a little bit more complex version of it, putting a little bit of Elliott wave in there, a little bit of Wyckoff, to kind of explain why the dragon is what it is. What, you know, if you want to get a little bit deeper, if you want to dive into this stuff, if it helps you understand the price movements a little bit better, that's what this is going to be. So starting from your left side, again, this is usually another top over here off to the side, and there's an ABC down, and then this is where the dragon's head starts. This is the ABC up, which in the Wyckoff method, this would be your preliminary selling. This is where, you know, the selling initially takes place here. A lot of times you'll see volume spikes over here of selling, and then you come down with an impulsive wave. You remember, 3 up, 5 down, and that's going to be your selling climax. That's going to be your initial low. That's going to be your left dragon foot. Now, in the Wyckoff method, after your selling climax, what you do is you get an automatic rally, an automatic reaction. Basically, that's just your first move up, you know, a relief, probably short sellers closing positions, longs, you know, trying to catch the bottom. but it creates this automatic reaction up. You get a pullback. Usually you'll get a higher low of some kind. Sometimes it's lower, depending. This is just an example. But you'll get a pullback, and you'll make a level a little bit lower than the automatic reaction. And then you get a move up that up thrust above this level over here, or the top of the range. It up thrust anyone who was trying to short this first high, thinking the price was going to keep going down, and then it comes back down, and usually you'll either, test a little bit up here, but you'll come back up and you'll get a bearish back test, and sometimes it comes straight down and tests the same area that it tested after the automatic reaction. So it's kind of like, hey, we tried making a base here, tried running it, come back down, and then you're retesting to see if the base is any good. A sign of weakness in this case, again, this has nothing to do with the dragon at this point, but just it would help the ideology behind this schematic. Usually when you get this first move down, if it undercuts this point, the first secondary test after the automatic reaction, that would be a sign of weakness. And then you get this move up into the last point of supply, or a higher or a lower high here, and you get a test. That's basically saying, hey, let's try one more time to get back above the range, and you'll either get rejected at the range, somewhere a little bit lower, but that's your test that says, hey, no, you're not going any higher. That up thrust was going to be your high. And after that, after this point, after you've gotten your bearish back test, especially if you've seen a sign of weakness, knowing that you undercut this low, which is a lower low, which is why it's a sign of weakness, then after you get this test, you're going to expect the aggressive selling to come in, because you're going to have multiple confirmations of a bearish bias at this point. And you're also going to wipe out longs who tried to come in here and say, hey, we got faked out here, but we're going to try again right here. And so you've got max pain for both sides. And that's kind of the idea behind the Wyckoff method and the ranges. They're designed to mess with you mentally, mess with short-term traders, and ultimately that's going to end up creating this spring event, which you get this impulsive move down that undercuts your selling climax. And the same idea, you're gonna want to see a rejection of the break lower. The same thing, that you get this nice move up. It usually, you'd love to see some sort of engulfing candles. You want to see a clear reaction, statement that is telling people you're not pushing price lower. Buyers are stepping in here to defend this level, and then you want to see the reclaim of the range. And that would form the spring event. You could call it a sweep, you could call it a deviation below the range. That's going to create your right foot idealized. This is stuff you don't need to know to trade this pattern, but it's stuff that helps me mentally when I'm trying to find my entry, when I'm trying to understand that this is the low, this is the confirmation, these are the things that you want to see. And once you understand this stuff, you'll see it everywhere. You'll see it in all kinds of price action. It just happens to tell a story when it comes to the dragon that I think helps people understand, or it helps me understand where I'm at in this process. But anyway, at that point, after you reclaim the bottom of the range, you get the test. This is going to be your sign of strength in Wyckoff. You got your last point of supply in between. You're going to get the move up to test, a lot of the times you'll come straight up to the top of the range here, consolidate below it, which gives you a partial decline, and that increases the odds statistically that you're going to break the top of the range and clear it. This sign of strength can. This is not the exact way it has to play out. Sometimes you'll get the sign of strength down here that just comes right up to the top of the range and hovers underneath it. Just an example for the sake of breaking through the top of the range, back testing it as support. You break, you hook, and you go. And that would be your markup phase at that point. That would be the same thing. You target the 100% measured move of the range or your double bottom. You target the 618. You could target the 113. And the 113, with a dragon, there's certain circumstances where it's more likely. Again, a lot of it revolves around, where's the supply. Sometimes the supply is higher. And again, the 618 is often, that's the make or break. Sometimes it'll come right to the 618 and that's it. Especially if the measured move of the double bottom lines up with the 618. Sometimes, that increases the probability that that's going to be the outcome. But this is the gist of it. One thing I do want to add is not only a way of finding a take profit target, but also a harmonic aspect of the dragon too. Because a lot of the time, this helps when you're trying to find an entry. This helps when you're trying to find a take profit. If we're talking a lower low dragon, if you take the cipher tool, a lot of times, if you get a perfect cipher, the perfect ratios of a cipher when you're measuring the dragon, sometimes not only can that help you find the bottom, if you're looking for the 113, or using the 113 as a stop loss, or the 1272, the 113 is ideal, because that is also in the context of a bearish breakdown, the rejection of a bearish breakdown of the 113 is kind of like an up thrust, down thrust level. It's also on the bearish shark. Cipher can be a 113, but the point being, you can say, hey, if I've got the perfect idealized, this wouldn't be in another case, but if this was like a 618, then you could be like, hey, I'm going to target for the cipher. But what you can also do that a lot of people don't take advantage of is you can just say, hey, instead of trying to figure out if it's a cipher, if it's a harmonic, if it's any other pattern you can think of, you can just keep it simple. A, B, and C are going to be your double bottom, and this D is going to be your measured move, which is 2.0. So that takes all the guesswork out of everything else. Everything else, like if you're trying to decide, hey, do I take my measured move here? Do I take it here? If you want to do it with the cipher tool, or if it was a high or low, you would use the XABCD tool. But with the cipher tool, all you have to do is connect your dots, and here's your target, which is the 2.0. Or if you wanted to target the 1618, instead of doing a fib, instead of doing the measured move, you could just use this and say, hey, there's my 618, there's my 2.0, yada yada, and keep on going. I think that I felt like a lot of that made sense. If you guys got any questions, hit me up in the Discord, leave a comment. I'm gonna make a few more of these videos. If you guys got a pattern that you want me to do a video on how I trade them, just let me know. I'm gonna try to make a habit out of doing these a little bit more often. And that's it, guys. Thanks.